Nobody took Bitcoin seriously until it changed everything. What if I told you that one of the most valuable financial assets in the world started as an idea almost everyone laughed at? No bank supported it. No governments recognized it. No billionaires rushed by it. In fact, for years, people called it internet money, fake money, even a scam that would disappear within months. If someone had offered you thousands of Bitcoins back, then you probably wouldn't have wanted them. But history has a strange way of rewarding the ideas that seem impossible. Today, the same Bitcoin is studied by central banks, regulated by governments, traded by Wall Street, held by billion-dollar corporations, and considered by millions of investors as digital gold. A single Bitcoin is now worth more than many people's annual income. Yet the biggest question remains: how did something created by an anonymous person become powerful enough to challenge the global financial system? To answer that, we have to go back to a world where money looked very different. A world where governments printed currency whenever economies slowed down, where banks acted as the gatekeepers of every transaction, and where almost nobody believed that ordinary people could ever own a financial system without trusting a central authority. Then, in the middle of the worst financial crisis in generations, a mysterious figure calling himself Satoshi Nakamoto quietly uploaded a 9-page document onto the internet. There were no flashy product launches, no billion-dollar marketing campaigns, no investors waiting in line, just an idea so radical that it questioned everything humanity believed about money, ownership, trust, and financial freedom. What happened next wasn't simply the rise of another digital currency. It became one of the greatest business revolutions of the 21st century, creating fortunes, destroying fortunes, inspiring an entirely new financial industry, and forcing the world to rethink a question that had remained unchanged for centuries. What if we never needed to trust banks in the first place? And that single question changed everything. For thousands of years, humanity trusted one thing above almost everything else: money. Not because it was made of paper, not because it was backed by gold, but because people believed someone was standing behind it. Kings issued coins. Governments printed banknotes. Central banks controlled economies. Commercial banks became the gatekeepers of every financial transaction. Whether you want to save your salary, send money across the world, or buy a house, there was always a trusted institution sitting between you and your wealth. For centuries, nobody questioned that system, because there seemed to be no alternative. As technology transformed communication, transportation, and even medicine, money remained surprisingly unchanged. The world became digital, but finance stayed centralized. Every transaction still depended on someone else's permission. Most people accepted that as normal, but a small group of computer scientists didn't. Long before Bitcoin existed, decades before anyone had ever heard the word blockchain, a handful of brilliant thinkers were asking a dangerous question. What if money didn't need a middleman? The first person to seriously explore that idea was computer scientist David Chaum. In 1982, while the internet was still a distant dream for most people, Chaum published a research paper proposing something revolutionary: an anonymous digital payment system built using advanced cryptography. His vision wasn't about making people rich. It was about protecting privacy in an increasingly digital world. He believed that as technology advanced, governments, corporations, and financial institutions would gain unprecedented control over personal financial information. His solution was something he called e-cash. For the first time, someone had imagined digital money that could move securely across computers without exposing the identity of its users. It sounded like science fiction. Yet Chaum wasn't satisfied with theory. He wanted to build it. In 1990, he founded a company called DigiCash, hoping to create the world's first practical digital currency. Investors were impressed. Technology experts admired the idea. Many believed DigiCash could completely transform online payments. But the world wasn't ready. The internet was still young. Very few people shopped online. Banks saw little reason to support technology that reduced their control. Consumers didn't understand why they would ever need digital cash. Without widespread adoption, DigiCash slowly collapsed into bankruptcy. To many observers, the experiment had failed. But history rarely remembers failed ideas for how they ended. It remembers them for what they inspired. Because every great innovation leaves clues behind for someone else to discover. During the late 1990s, two more pioneers quietly continued the search. Computer engineer Wei Dai introduced a concept called B-Money, describing a financial system where people could exchange value without relying on governments or banks. Soon after, computer scientist Nick Szabo proposed BitGold, another digital currency designed around scarcity, cryptography, and decentralized ownership. Both ideas were remarkably ahead of their time. Both understood that digital money could exist independently of traditional financial institutions. And both failed to become reality, not because the ideas were wrong, but because the technology simply wasn't ready. For nearly 3 decades, brilliant minds kept asking the same question, yet nobody could solve it. Then the world changed almost overnight. In 2008, the global financial system experienced one of the biggest crises in modern history. Banks that people believed were too big to fail suddenly began collapsing. Entire financial institutions disappeared within weeks. Governments rushed to rescue banks using taxpayer money. Millions of ordinary people lost their jobs, their savings, and in many cases, their homes. For the first time in generations, public confidence in the traditional financial system began to crack. People started asking uncomfortable questions. If banks could fail, who was really protecting our money? If governments could print trillions of new dollars whenever they wanted, what gave money its value? And if trust was the foundation of the financial system, what happened when that trust disappeared? While politicians debated solutions, while economists argued over policy, and while television networks focused on the crisis unfolding before the world, someone, somewhere was quietly watching, not giving interviews, not attending financial conferences, not asking investors for funding, just writing code. Then, on October 31st, 2008, a message appeared on a small cryptography mailing list. It wasn't a press release. It wasn't a billion-dollar startup announcement. Most people never even saw it. Attached to that message was a simple 9-page document titled Bitcoin, a peer-to-peer electronic cash system. The author's name was Satoshi Nakamoto. No photographs, no biography, no company, no explanation of who, or even what Satoshi really was. Just an idea. An idea that quietly combined decades of failed experiments into one complete working system. It promised something the world had never seen before, money that belonged to everyone, yet was controlled by no one. At first, almost nobody paid attention. But hidden inside those 9 pages was the beginning of one of the greatest financial revolutions in modern history. And within just a few months, the first Bitcoin would be born. For nearly 2 years after Bitcoin was born, almost nobody cared. There were no television debates, no billion-dollar investments, no financial institutions fighting to buy it. In fact, if you had mentioned Bitcoin to the average person in 2009, they probably would have laughed or simply asked one question. What exactly is Bitcoin? At the time, Bitcoin wasn't seen as the future of money. It was seen as an experiment. A strange internet project created by an anonymous programmer whose real identity nobody knew. It had no government backing, no famous investors, no physical form, and no guarantee that it would survive another year. To most people, it looked less like a financial revolution and more like a hobby for computer geeks. But every revolution begins with a small group of believers. Inside online forums like Bitcoin Talk, programmers, cryptographers, and technology enthusiasts started experimenting with this strange new digital currency. They weren't buying Bitcoin because they expected to become rich. They were fascinated by something much bigger. For the first time in history, people could transfer value across the internet without asking permission from a bank. No paperwork, no banking hours, no middlemen, just mathematics, cryptography, and trust in code. It sounded impossible. Yet somehow it worked. One of the earliest people to recognize Bitcoin's potential was legendary programmer Hal Finney. After receiving the very first Bitcoin transaction from Satoshi Nakamoto himself, Finney didn't celebrate because he had earned money. He celebrated because he believed he was witnessing the birth of something historic. Years later, Hal imagined a future where Bitcoin became the world's dominant financial network. At the time, that prediction sounded almost ridiculous because one Bitcoin wasn't worth thousands of dollars. It wasn't even worth $1. It was practically worthless. Then came one of the most famous moments in internet history. May 22nd, 2010. A programmer named Laszlo Hanyecz posted a simple message online. He offered 10,000 Bitcoins to anyone willing to order him 2 large pizzas. Today, the idea sounds unbelievable. But back then, nobody considered Bitcoin valuable enough to spend. There were no exchanges, no online stores, and almost no businesses willing to accept it. Bitcoin existed almost entirely inside small online communities. Eventually, another Bitcoin enthusiast accepted the offer. 2 Papa John's pizzas were delivered. The payment was made, and for the very first time, Bitcoin had been used to purchase a real-world product. History would later remember that day as Bitcoin Pizza Day. At today's prices, those same 10,000 Bitcoins would be worth hundreds of millions of dollars. People often laugh about the world's most expensive pizza, but that misses the real lesson. Laszlo didn't lose a fortune. He proved Bitcoin could function as money. Without that first purchase, Bitcoin might have remained nothing more than an interesting computer experiment. Sometimes, changing history costs more than anyone realizes. As more people learned about Bitcoin, something remarkable started happening. Its value slowly began to rise. Not because governments approved it, not because banks promoted it, but because more people simply believed it had value. This is where one of the oldest principles in economics quietly entered the story: supply and demand. Unlike traditional currencies that governments can print whenever they choose, Bitcoin follows one simple rule. Only 21 million Bitcoins will ever exist, not 22 million, not 50 million, not one extra coin. That limit is permanently written into Bitcoin's code. Every 4 years, the number of new Bitcoins entering circulation becomes even smaller through an event known as the halving. As supply decreases while demand continues growing, scarcity naturally increases. It's the same economic principle that gives value to gold, rare art, luxury watches, and collectible assets. The harder something is to obtain, the more valuable people often believe it becomes. But scarcity alone wasn't enough. Bitcoin needed trust. And trust is something that can never be programmed overnight. As Bitcoin slowly gained users, developers around the world continued improving the network. More miners joined to secure the blockchain. More wallets were created. Early exchanges appeared, making it easy to buy and sell Bitcoin for traditional currencies. For the first time, Bitcoin wasn't just surviving. It was becoming an economy. Then, in early 2011, another psychological barrier was broken. 1 Bitcoin reached $1. From a financial perspective, $1 wasn't significant, but psychologically, it changed everything. People no longer saw Bitcoin as worthless internet points. They began seeing it as an investment. And once money enters a conversation, human psychology changes faster than technology ever can. Media coverage exploded. Some newspapers called Bitcoin a revolutionary invention. Others dismissed it as the biggest financial bubble in history. Economists argued. Governments watched cautiously. Banks remained skeptical. But ordinary people became curious. Every increase in price attracted new buyers. Every new buyer pushed prices even higher. And every new record created even bigger headlines. This cycle is known in business as a network effect. The more people who believed in Bitcoin, the more valuable Bitcoin appeared to become. And the more valuable it became, the more people wanted to own it. It was a self-reinforcing cycle unlike anything modern finance had witnessed before. But rapid growth often hides dangerous weaknesses beneath the surface. Because while millions of new believers were rushing into Bitcoin, almost nobody realized that one of the biggest crises in cryptocurrency history was already quietly unfolding. And when it finally exploded, many believed Bitcoin's journey had come to an end forever. By 2013, Bitcoin was no longer just an experiment hidden inside internet forums. It had become one of the most talked about financial innovations in the world. Its price had climbed from just a few cents to hundreds of dollars, and eventually crossed the unimaginable milestone of $1,000 for the very first time. For early believers, It felt like proof that the impossible was finally becoming reality. For everyone else, it looked like madness. Television channels debated whether Bitcoin was the future of finance or the biggest scam ever created. Economists argued that digital money backed by nothing could never survive. Governments struggled to understand how they should regulate something that had no headquarters, no CEO, and no central bank. Yet despite all the criticism, millions of people continued buying Bitcoin, not because they fully understood blockchain, but because they feared missing the next big opportunity. And history has shown us something about financial markets. Nothing spreads faster than greed. Every day, new investors arrived hoping to become rich overnight. Stories of ordinary people turning a few $100s into life-changing fortunes spread across the internet like wildfire. Bitcoin wasn't just attracting programmers anymore. It was attracting dreamers. But beneath all the excitement, a dangerous weakness was quietly growing. Most people weren't storing their Bitcoin themselves. Instead, they trusted online exchanges to hold it for them. The largest of them all was a Japanese exchange called MTGOX. At one point, it handled more than 70% of all Bitcoin transactions worldwide. To millions of users, MTGOX wasn't just another website. It was Bitcoin, which meant that if anything happened to MTGOX, the entire cryptocurrency industry could collapse with it. And that's exactly what happened. In early 2014, customers suddenly discovered they could no longer withdraw their Bitcoin. At first, people assumed it was a temporary technical problem. Days passed, then weeks. Rumors spread across the internet. Panic replaced optimism. Finally, the truth emerged. Hackers have been stealing Bitcoin from MTGOX for years without anyone realizing it. Around 850,000 Bitcoins had disappeared, worth hundreds of millions of dollars at the time and tens of billions today. Almost overnight, the world's largest Bitcoin exchange filed for bankruptcy. The news sent shockwaves across global financial markets. Newspapers declared Bitcoin dead. Television experts confidently announced that cryptocurrency had finally been exposed as nothing more than a failed experiment. For many investors, their savings vanished overnight. Some lost everything. It wasn't just money that disappeared. It was trust. And in finance, trust is often more valuable than the asset itself. Bitcoin's price collapsed. Fear spread faster than hope ever could. Many people who had once called themselves believers quietly walked away. To them, the dream was over, but something unexpected happened. The Bitcoin network itself never stopped working. While one company had failed, the blockchain kept producing new blocks roughly every 10 minutes. Transactions continued. Miners continued securing the network. Developers continued improving the software. For the first time, the world began understanding the difference between Bitcoin and the businesses built around Bitcoin. MTGOX had failed. Bitcoin hadn't. That distinction would become one of the most important lessons in cryptocurrency history. The following years were painfully slow. Prices remained weak. Media attention disappeared. Most investors lost interest. Bitcoin wasn't trending anymore. It wasn't exciting. It wasn't making headlines. But quietly, something far more important was happening beneath the surface. Developers continued making the network more secure. New cryptocurrency exchanges learned from MTGOX's mistakes. Cold storage solutions improved dramatically. Institutional-grade custody services slowly began appearing. Mining became more professional. Wallet technology became easier to use. In other words, while the world believed Bitcoin was dying, it was actually growing up. The strongest technologies rarely evolved during periods of success. They evolved during periods of failure. Because failure exposes weaknesses that success often hides. By 2016, Bitcoin had survived more than almost anyone expected. It had survived government criticism. It had survived exchange collapses. It had survived media attacks. It had survived years of market pessimism. And every time people declared Bitcoin dead, the network simply kept running. Then came 2017. Almost without warning, the world came back. Bitcoin climbed past $1,000 once again, then $3,000, then $5,000, then $10,000. Every new record created even bigger headlines. Google searches exploded. Television channels covered Bitcoin almost daily. Friends started recommending it to friends. Families discussed cryptocurrency around dinner tables. Taxi drivers gave investment advice. Even people who had laughed at Bitcoin years earlier suddenly wanted to buy it. This phenomenon has a name in behavioral economics. FOMO, fear of missing out. People weren't investing because they understood Bitcoin. They were investing because they feared everyone else was getting rich without them. History repeats itself, only the asset changes. By December 2017, Bitcoin reached nearly $20,000. The world had never seen anything quite like it. But markets driven by emotion rarely move in one direction forever. Because just as greed can push prices far beyond reality, fear can pull them down even faster. And the next chapter will become one of the most dramatic boom and bust cycles in modern financial history. It would test not only Bitcoin's value, but whether the world still believed in the idea that it started with nothing more than a mysterious 9-page white paper. Bitcoin's story is far bigger than the rise of a digital currency. It's the story of an idea that almost everyone dismissed until it forced the entire financial world to pay attention. It reminds us that history isn't always changed by the biggest companies or the most powerful governments. Sometimes it's changed by one bold idea, one anonymous creator, and a small group of people willing to believe in a future that nobody else could see. If you enjoyed this documentary and discovered something new about the incredible journey of Bitcoin, don't forget to like this video, subscribe to the channel, and turn on the notification bell so you never miss our next premium business documentary. Here at the Capitalist Diaries, we uncover the hidden business strategies, billion-dollar companies, revolutionary technologies, luxury brands, financial empires, and the untold stories that quietly shape the modern world. Now we'd love to hear your opinion. When do you think people will fully trust Bitcoin? Do you believe it will become the future of global money, remain a digital store of value like gold, or eventually be replaced by something even more revolutionary? Share your thoughts in the comments below. We read every comment, and your perspective might inspire our next documentary. Until next time, remember, the biggest opportunities in history are often the ones the world laughs at first.